The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour on this Wednesday. It is July the 9th. July the 9th? Yep, July the 9th. And welcome. I'm here Monday through Friday, the Technicians Hour, 11 o'clock till noon Eastern Time. My pleasure to be here at 877-927-6648. And the methodology that I use is based on the Chapman wave, the sequential higher highs or lower lows. The Chapman wave is the waveform that never sleeps, basically counts each successively higher peak and the lower troughs. On the way down, we call them troughs. And we look at chart patterns that repeat over and over and over again. When I'm looking at the E-mini chart, which you'll usually see when I start off the program, just to show, this is what I show my subscribers every day. I give an outlook of what we're looking at in the futures. I don't give any trades on the futures. There's just so much that I give, just so much detail that I give in my report itself that I couldn't. It would almost be like another service if I was to give trades based on the E-mini futures. But at least I give you the patterns that we're looking at, why, the wherefores. I spoke, yes, for the last 2 days I've been speaking about Chapman wave trend gauge. This is a gauge that I've used. It's already Richard Arms index, but I use it in a special way. And it has said that on Monday, that intraday Tuesday, you should get some kind of a rebound of about 7 points in the futures, which should translate to a rebound in the cash indexes. And it can come from a much lower low, but it's a surprise rebound when everything looks very negative. That's exactly what we got, and I have the exact same indication today that there should be, within 1 to 2 days, there should be an intraday rally, and we've got that, and now that's done. And now it starts the real session of the day. We'll get into all these details, but in the meantime, what we're looking at here are a number of techniques. Let me just show you something for those of you who are new, if you are listening through eSignal. And welcome eSignal, a welcome addition to the Tiger family. There's a pattern that I call the stork leg formation. And what it is basically is a long move up. That's a leg. That's besides the peaks that go to the upside. This is just like taking the whole thing as one continuous movement until it stops. And then what happens is it forms an oval formation, and then that's the body. The moment it breaks above the body high, in this case it was 1960 round number high in the E-mini futures, that starts the neck. And the neck can continue until it stops, and then it makes the head, excuse me, and then it makes the beak, just like a stork. And then that beak goes, invariably it goes at least into the body, and that would be under 1960. Well, what have we done? Yesterday we went down to 1952.75. So now what we're looking at is that complete? Because when the pattern completes and the beak is done, there's usually a very, very nice rally. Saw that over here back on the 12th of June. I'm going to show you some other charts to show you how my thinking is extrapolating data, how my thinking is unfolding. And so that says that if there is a break to the 1957 area today, and it holds for more than two 120-minute bars, here's the 120-minute chart on the right, it says that the candle that I've designated a Chapman wave Roman candle, that one right over there, let me make it bigger so you can see what we're talking about, opens, it gaps down, has a fractional high to make a tiny little wick, that's what you can light, then it plunges lower, and then it closes 50% or higher, not too high, but above the low of the low bar. In this case, that would be the low of 1952.75. That's exactly what happened. So now we're going to watch, because if there's a close above 1970.75. That says you can expect another day of higher highs before you turn back down. But in this particular case, when you get Roman candles and they occur at certain levels, and they have their function is to work at certain levels in certain ways. So there is the up channel. Now I'm going to close this pattern a little bit so you can see this is a very long-term, more intermediate term to long-term up channel that is not broken support yet. That support breaks at any point in the next 3 days or so. If 1947, if it closes under 1948 to 1947 support, it's closed. And as far as I'm concerned, the pattern that I was talking about this morning has unfolded exactly. This is what we wanted. We wanted to pop up to attempt to get some of the shorts that we missed getting. We're in short positions. We're in long positions. We actually tried to get a long this morning. Missed it by 1 penny. 1 penny, and then it moved higher. But one of our longs is doing very nicely, and the one that we just missed is actually doing quite well. Unfortunately, it's 30-something cents of what we wanted to get it at. So now what we're looking at is this pattern. What I'd say to subscribers, let me make this bigger. This is the 120-minute S&P E-mini. What I said is it's done its job to get back to the 1952 in an arch formation. It did a left side, right side, almost price time match to within 1 bar of 2 bars of the exact reference point, and that reference point is right there, the candle at 4:15 in the afternoon on the 30th of June, when the low was set at 1950.25. So we've got that. Oops, I'm sorry, that was not the one. That was this bar right here. And that was on the 30th of June when the low was, 1950.25. So what we've done is we've gone 2 points higher, had a bit of a rally, and what I said is there are 2 fighting patterns. One is the arch formation. So my CD introducing the Chapman wave methodology, it's only available at TFNN. Let's go to the arch formation right here. Let's see. Arch. I think it's chapter 13. Yep, there it is. So the arch formation says that if you make a left side to the right side price time match, there could be a bounce if it successfully tests that level. If it goes under it, means one thing. If it goes right to it but doesn't break it, that means another thing. And if it closes below it, it means something else. So this is slide 294 of 476 slides. This is actually the BBHs, the biotech holders, way back when it was trading 130. That was in 2004. So here's the pattern. And that's the pattern we were looking at, this arch formation. 2 things are occurring. One is arch formations often break down after peak A or B. B goes to B minus. So we're going to be watching this real closely. And the fighting pattern is this up channel, which has already been broken. Now there could be another one right here from the base. Let's give it a little bit of room and say 1957 on the futures. A break under that says that's a problem. It's going to go and retest the 1952 level. So now let's go on, and let me just give you the numbers. And as I give you the numbers, I'm going to run through the charts, and I'll keep the 120-minute chart up for now so that some of you who are new to my work can get a feel for how peak D, the 4th highest peak, is so important. You can go higher, but peak D, that is peak D right there in the E-minis. So here we go. The Dow right now is trading at 16,932, up 25 INDU. And that has made a peak. I'm calling it for now a peak F. And if that's going to be confirmed, if there's a close in the Dow at any point in the next couple of days under 16,874.79, that was the low of yesterday. Close below says be careful. The Dow could be going low. A close in the 16,990 says, hey, wait a minute, I've still got residual strength. And that's why you can see some of the cyclical stocks still doing okay, while some of the others are doing very poorly. And the 120-minute chart did exactly what we were looking for. It went to the peak D. Let me just put this in here. Let me also make it a little bit smaller as a chart so that you can see the whole thing. The last one was a peak F, and this is a peak D. Pull back very sharply. Shows you the strong resistance in the 60,960s. And I said to subscribers this morning, I give a very detailed report. This is my Dow report. This is one part of my Dow report. This is the 5 quadrants, I jokingly call them, 5 sectors of the overview section that I send out every morning. And this has the peak D in the 120-minute chart. Nice bounce to a leg B. We'll see what happens with this resistance line. And the VIX index has made a peak B, and it should. If there's weakness later today, the VIX should start to climb and go above 1251. As soon as it does that, that starts leg C. If it breaks under $11, it's 1182. That'll be remarkable action. Say this market's going much higher. This is the trend gauge that I use, and this is the Dow daily chart and the S&P daily chart, and then I write a whole overview saying what looks good, what doesn't look good, what the parameters are, etc. So let's go on. And the S&P. So this is the 120-minute chart. I'm now going to put the 120-minute chart a little lower, so you're going to see 4 time frames. The left is the daily, the right is the weekly, and in the middle is the weekly, on the right is the monthly. Leg E in the monthly, no signs yet. All the technicals are still very good. The weekly is just starting to show a little deterioration, but with extremely strong stochastic. That's that red and green set of lines right there. And the MACD, the moving average convergence divergence, is still doing well, but the histogram is starting to shrink a little bit. That goes to the 0 line right there. The vertical lines here are volume lines. So if the Dow closes on a weekly basis under 16,800, that'll be the first time it's gone under the 9-period exponential moving average since it broke out above it back in the week of the 18th of April. That is really quite something. Now what we've done is we've made 2 lower bars. This is what I'm calling the head in this particular pattern. And we've had 2 bars with slightly lower highs, slightly higher high in this week. 17,074. 17,074.65 was the high last week. 17,063.83 is the high this week. So we're going to be watching this real closely. But the technicals are still very strong, showing just the first signs of a little deterioration, but it's only not even halfway through the week. The SPX.X, that's my S&P cash, is also making a peak E if it doesn't break above 1978.58. The daily has made I'm pretty sure this is a peak D right now. The stochastic is down at under 80%. That's not so good. And the MACD is turned down. That's saying that the black line, which was support for the 9 moving average support, it might become resistance now for the second day. We're going to watch this right here at 1967. A close today into the 1965 or lower area says, uh-oh, be careful. Now we're starting to see the signs of the 9-period moving average changing its force from a propellant to a repellent line. And on the weekly basis, under 1942, the S&P starts to weaken a lot. The comp index is up 15 at 44.08. Gold is up 8 at 13.24. Interesting. Silver's up 10. Up 6.25. Crude oil is down. Bonds are down. I'll be right back after these messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour. I've got a couple of questions in the den. Let me just get them one at a time here. CNQ is trading at 45.52, down 45. If you were short, where would you put a stop? I'll come back to it in a moment, but I'm just going to say to you, I'd put a stop just above the bar, in the 120-minute chart of 46.08. It's at 45.50. No, I wouldn't make that my stop. I'd have a little bit more room, but I'd say at 46.08, I'd be a little bit careful because if it does even pop there, I don't think it can right now. But if it does, you want it to arch over and come right back to the 45.50s where it is now. It should be like a rogue wave spike. Oh, if you were long. Whoops. Long. Be careful then. What you want is to see it go over 46.08 and hold. And then you want to see it try the next level of 46.37. Right now, holding it long, I would tighten up my stop. I would, well, I don't know how long you've had. If you've held it for a while, there could be a retracement to the 43.80 level over the coming 2 weeks if it takes out 45.10 to 44.90 very quickly, because then it would be pulling back, and that's the 44.60s is kind of the next level of support. I'll come back to it. I don't want to rush into it. Ari in Arcadia is calling. I'm going to go to Ali right now. Hi, Ari. How are you?
I'm very well, Basil.
Good.
Silver Wheaton kind of broke out today, so it affected the monthly and weekly chart, and I'd like your opinion on it.
Well, you are long this and you're holding it, right?
Yes.
So this is what I'm looking at. This has been, there's another one that I was looking at the other day. But Silver Wheaton has been almost unstoppable. It's like in an orbit of its own. It's as if it's telling us that it is going to move higher until it stops. And even when it stops, the support should be very strong. The only way this particular pattern, I call it the snail pattern, and I'm going to explain why in a minute. But let me just finish my notation. There's an alternate wave count here, and this is the daily. So it's E/A and F/B. I did this a little quickly. I might have missed something, but that's what I've got right now, F/B. But it's really the MACD. So, folks, if you're new to Tiger TV, new to my work, if you learn how to use the moving average convergence divergence, that's the MACD, we call it for short. When it broke out in silver wheaten, trading at 27.05 of 28 cents, up 1.05% right now. When it broke out above in the fast-moving average, it's really the 9-period differential. I like to call it the fast-moving average because it's the one that moves quickest. I'm not caring about the derivations, etc. And the red one is the slower one. The green one is the makeup. It's the result of dividing to moving average. But in the meantime, back at the ranch, it really gives you the vertical line, the distance between the two, but it doesn't matter. What it's saying is that when it broke out on the 6th of June at 21.04 and turned the black line, which is the 9-period exponential moving average, into tremendous support. In fact, such support, it was almost like a magnet. When you turn the magnet the other way, instead of being a magnet, it's a propellant, and the metal won't even come close. That's exactly what this is. So what's happened is you've got, in the Chapman wave methodology, the idea is to identify the lowest, I call it the most identifiable lowest bar. That's the easy way to do it, and merely start counting each successively higher peak. That's also what Ari uses in one of his techniques, and he noticed that it was breaking out beautifully. It never came even close to the 9-period exponential moving average, and at the same time, the green line, the 9-period differential, has just been fantastic. You can just use this one indicator for many stocks, and you'll do very well. So what happened is it broke above the 200-period moving average. That's this goldish, pinkish line right there. And now what we're looking at is a shorter duration moving average, that is a shorter result moving average, is now above the slower one, the 9 EMA. And it's saying this is where you can expect from here that the height of the move is fairly limited, even though it keeps going higher. But the big issue is that the moment you start to see a deterioration in the price, you will see that this red line, this little tiny red line here, is going to become even more important. So I've got it in F/B. The instant restart, I don't want to make this too complicated, but there's a Chapman wave instant restart, which is the reason why we have an alternate count here. It's very positive, but what often happens in this particular move with the MACD is it goes to an F/B, then a G/C, and then it has a pretty sharp move to the downside. It doesn't fulfill the D on the upside. But most importantly, what both Ari and I want to look at is the monthly. What exactly is happening? It's broken out, so no matter what happens, even if it reverses from here, it's a new leg higher. How do we treat it? Is it bullish? Is it a bearish sign? Let's interpret that as soon as we get back. At Ari in Arcadia, Florida, we're looking at silver wheaten. I'll be right back. Dow's up 32.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman, Tiger Technicians Hour. Dow's up 35, S&P's up 5 on this 9th day of July. And what we're looking at here with Silver Beach and with REN Arcadius, we're looking at a stock that's been extraordinarily strong. It has gone in one of the quickest moves that it's had. You thought this was a quick move from the week of December the 6th at 1923 to a peak D high of 27.14 in March. Hey, that's nothing. Look at this. It's gone. It went straight down from that 27 level down to 20.03. That is 28 or something % decline. And then what happens is it starts a brand new move, and in 1, 2, 3, 4, 5, this is the 6th week, it breaks out a new recovery high. Well, I'm going to open this up to see if we've got a W pattern here. Yep, we've got a W pattern. But what's more important, we've got the inverted pattern that I talk about very often. I talk about a pattern that goes into a series of H's, and then it retests, and if it breaks out above the arch high, it can be very powerful. What this has done, it's gone into a series of W formations. So before you think, oh, this is unbelievable, W formation didn't make a lower low the last time and it's made a new high, this can really break out. What we need to do get a little tea for the throat there, is to show that these W formations are building upward force rather than having that strong resistance in the 29 area. So let me just finish this off here, just do a couple of more chart patterns. There it is, right there. And this is a much smaller and quicker one, shallower and quicker out the box. And that's going to be very important because straight line moves are a little different to the curves. When you have a curve in a cup or an arch, that's different to the V formation. The V formation says, I've got enough energy. I don't want to even waste time by going sideways. I just want to go up or down to a particular target, and usually it's a swing target that is a significant peak or trough on the left side. And in this case, the previous high was 27.14, and the high so far is 27.16, 2 cents higher. So it's breaking out, but it hasn't broken out. Ari, you saw that it didn't break out above the 29.17 high of the week of August the 30th, right?
No, it hasn't.
Okay, so this is what I'm thinking. You are in your positions. Are you thinking of maybe adding to it or taking a little bit off as it gets to resistance? What's your thinking in terms of your trade itself? No, I'm sorry. What's your thinking in terms of your position play? And are you thinking of a trade? That's what I should have said.
I'm hoping to make 29, and at 29 I will take some profits.
Okay, so this is what I'm going to recommend to you because the 120-minute chart has a beautiful up channel, and it keeps testing this line. I'm going to make this line green because if it breaks out above, that's very good. Normally, I don't want to make this too messy, but since those of you are looking live, you can see me do it. It's much easier to see when someone's doing it live because then you know exactly what each line represents. Now I'm going to expand the 120-minute chart. I'm going to lift it up so you can see. The stochastic is already back to 80%. The MACD is flat. A flat MACD says unless the beta between the two moving averages expands, it says you can go upside, but the upside is limited. And what it says is there's a good chance that you're going to go to a leg D just above the 27.16 level. And you remember we were looking at the daily chart. I don't want to make this too complicated. But in the daily chart, what I'd be doing is I would raise on some part of my position. I do expect some kind of a pullback, maybe just a little bit, and then maybe a higher high. That higher high, if it breaks, let's just say today's high of 27.16 is the day's high, but tomorrow there's a lower high, and then on Friday or Monday, it pops to the upside. That's the level. I don't think I would actually wait for the 29s. What I would do is I'd use a trailing stop so that if it doesn't get there, because nothing here is negative, but negativity, if it goes to a G and fails, comes very quickly. It could even be a gap down. I would say start raising your stop and be a little judicious. It might mean that you're taking some money off $1 away from your target. I don't think that's a big deal because of the speed that it could deflect lower, especially since the weekly chart has the W formation and it hasn't closed above 27.14, the high of the 14th of March. If it does close above it, that's a positive because it's going to push the stochastic to 86% probably, and that's going to be very positive. So I like it. I wouldn't take it. I'd stop myself out of a little bit on the way up. I would have the target of the 28.50 to 29.20 area, but at the same time, I'd be a little bit more aggressive at taking some profits maybe before it gets there by using a trading stop. And the trading stop can be fairly tight. You can even make it 26.25. So that's kind of the way I'm looking at it. What I would do is I'd be looking at it, and in 2 weeks' time, if it's still in this area and above 25.5, by that, within a week, let's say, sometime next week, Wednesday or so, that would be the point where you'd be saying, okay, on the next pullback, I'm either wanting to add or I'm going to be lightening up even more, because that's where all the information is going to be told. Right now, stochastics are 95% in the daily, and the MACD is still very good. So I'm just saying, be a little proactive in your thinking and your action. because it just might not get to your target in this move. We don't know. And based on the 120-minute chart, the sideways move, higher highs and higher lows, is very steady. And it says it'll be a surprise if it really spikes to 27.50, another 60 cents from here, without some really strong activity in silver itself. So I hope that helps you. And all I would say to you, Ari, is on the downside, the 26.23 to 25.60 area should be a really good cushion on any pullback. But the pullback might be a very quick, sudden pullback. I'm just saying that that's the level I'd be looking at. So I hope that helps you.
Thank you so much.
Thank you, and congratulations on a fabulous position play. Folks, I had a question in the den, CNQ. I'm going to go back to that. It's a very interesting stock because in this particular phase where there's a rotation going on, you want to see whether or not the rotation is occurring. Let me just put this in here, A, B. So give me 1 second. I'll put the up arrow in right here. And we're looking at CNQ, which is Canadian Natural Resources, trading at 45.55, down 44 cents, making a peak A, peak B, peak C, and then we get the D. Remember, D is what you always expect, and that's where you got to take some kind of a stance to see how it acts and reacts. That's why I usually say take it a little bit off and have a trading stop on the rest, or have a trading stop and keep your core position. And now look what's happened. It's made a left side, right side. It's making a left side, right side price time match by pulling back. And that pullback says it could hit in the area of 44.90 to 44.70 sometime by the 10th. That's by tomorrow afternoon. If, in fact, it takes out 45.32, that's 20 cents or so lower than 25 cents lower than it is right now. That's the trend line I'd be looking at, and that would be the target area. It needs to quickly bounce to 45.77 or higher to save the day, and that would actually be very positive action. Now, I haven't had a chance to do the weekly charts other than to say 43.81 is the 9-period moving average support. It looks to me like it's running out of steam to the upside, and I in the next break, maybe I'll have a chance to do the notation because there's some other things I want to look at. But in the monthly chart, the big question is, and in the den, that's probably peaky, or what you're looking at, can it get to the 52.04 high of March of 2011? And I would say, based on the MACD and the slow stochastic, the chances are the 46.50 will be the actual clue. If it can get to, 47.50 will be the clue. If it can get to 47.50 by next week, that'll be really good action. If it can't, then you got to watch out. It could stall here and take a period of rest, and that rest would say come in if it breaks under 44.30 to 44, and then I think it can pull back. So that's CNQ. Let me just quickly pull up the so the daily has gone A, B, B, C, D. Made a doji high, peak D. No big deal right now, but the technique that I use of the MACD and stochastic says, be careful. It is pulling back. If the price holds and the technicals pull back, that says it's got good support, and that 45 area should hold this support. So I hope that helps for that question. Let's see, breaking news, former New Orleans Mayor Ray Nagin sentenced to 10 years. Okay, that's not market news. So let me see. So the Canadian dollar. This is USD. So this is very interesting. The US dollar, Canadian dollar currency pair. It's trying to rebound here. It's not doing all that well. The weekly chart has made a peak E in the Chapman wave from the 200-period moving average. Beautiful support. It goes all the way up. My eye immediately says, 1.04 is the 200-period moving average. It's at 1.065. That's where it's going. But a little more detailed work says, check with the monthly. The monthly hasn't given a down arrow yet because the MACD hasn't turned negative. And if it does, the question is, yes. Okay, yes. The question is, where to short the Canadian dollar? I would have to say that based on the 120-minute chart with a peak G, we were talking about peak G's just a moment ago with Ari, it could be a real potent sell signal. Peak G says that if it takes out the low of yesterday, 1.0645, it's going lower. My target, in fact, would be that 200-period moving average and the left side low bar of 1.063. Let me just double check. 1.063. We were looking at the weekly. That's not there. Where was that? That must have been the daily. How did I get that level? What was I looking at? Was I looking at silver wheaten? No, I don't remember what I was looking at. But yes, if it breaks today's low, in fact, if it goes under today's low, there's a really good chance that 1.063 will be the next level, and then 1.0619 is the low of the 3rd of July. Be real careful there. So that's that. Oh, and the question is CNQ. Would you sell some here? Yes, I would sell some here. And would you handle the trade short term, in term, long term? So let me just go back to that, because it's a stock that's acted so well. I don't want to just dismiss it. It hasn't yet given a sell signal. Okay. Yes, and this is one that I will do in another few minutes. I've got a break, and I'll do the weekly, and we'll wrap up with that one. So I'll make a note, CNQ, write it down. CNQ for Peaky in the Den. Peaky. And the other question was, okay, so in Marshall. So Marshall, yeah, possible short in Canadian dollar right here. I don't like to just jump into that if I'm going to give you advice on it. So let me just go back to it. USD CAD. Would I short right here? I'd have to look at the 30-minute chart or 40-minute chart. Let's go to the 40-minute chart. USD CAD. Okay, my preferential range would be 1.0659 to short, because that would give you that bounce. Let me just see if the 100 and the 40, any chart you take, folks, should give you, fulfill these techniques that I talk about. There's A, this is a 40-minute chart. I haven't looked at a 40-minute chart for absolute ages. A, B, C, D, and then it suddenly has a news-related spiral to the upside, and it goes to an E, 1.6933. Yep, that's it. So it goes to a peak. There's a D, and then it's a rogue wave, move to the upside, or right arm extension. All of these are techniques that are in my CD introducing the Chapman wave methodology, and then it comes down. Yes, I would have a little short position, just a starter right here, but my real preference is at 1.0659, and I'd have a stop at about 1.066. Now, I don't know what that works out in terms of your risk reward. I'm just saying these are the points of reference that I would use. I don't trade it, so I don't even know what each pip counts as. I trade the E-minis, so it's just out of my vernacular. So all I'm saying is that I would prefer a bounce to do it, because the 120-minute chart is looking ready for a bounce, and the 40-minute says it should have bounced and it's failed. So I'd start a little position, but that's really where I would want to short it. So that is that. Okay, so I wanted to look at a couple of things here. Look at the 120-minute chart. Let's get rid of this, and I'm going to show you something very interesting. I'm just going to run through a whole bunch of charts. Look. We've got the DIA. I bet that's the one I haven't finished. Made a peak D, rallies up, and starts a failure pattern, and it will fail if it closes under any bar that closes a 120-minute bar under 168.86. Says, be real careful. We're coming back down to test the low of yesterday of 168.44. On the upside, a close above 169.40 and 120-minute chart. We say that's good. We can have another one and then come back down, so that we're positive for the shorter term. We've got a break coming up. All right, I'll do the CNQ during the break, and then I will wrap up and hand it over to Larry Pesavento. Great program all day from State. I'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, we're back, so let's just go back C and Q. I have finished it off. So in the daily chart, it's just made a peak A, and then it goes to a B, and that's a parallel high. It's very unusual to see that B with parallel highs, and that says you just didn't have enough effort and energy even to get to a C. So I'm watching it real closely, and the question is, taking profits, would one short it? And I'm going to suggest this, that if you've been in it for a while, oops, I put NCQ. See, you got to get the right. There you go. CNQ is, in fact, the Canadian Natural Resources, and it's gone to a peak D with a doji high and then a second doji candle, I call it the silent doji, and it's just pulling back in very small moves. And I would not want you to change your long position because of the shorter term, because the MACD and stochastic in both the weekly and the monthly are really strong. So all I would do is I would say to you, see, now we're off the high of 46.65. We're at 45.60, a point lower. I don't want to say to you, take how can I put it? Take something off here just because it's gone very high. What I want to say to you is the price has held and the stochastic and MACD are pulling back quite sharply. That's talking about internal strength. So I'm going to make the suggestion that first of all, I don't want you to take something off lower down underneath 44.60 because at that point it's getting real close to finding tremendous support. And is that maybe where you would even want to add? It's such a strong stock. So here's my recommendation. If you've got very good profits and you appreciate that between 45.59 and 46.50s, the recent the all-time high that it made just recently, it's a very good time to be taking something off to reward yourself, good money management, and it's money that later on you could put back if you wanted to. Then I'm going to make the suggestion, do one of two things. I wouldn't go much lower than the low of today, 45.36. 20 cents is not a big deal when you're doing something like this for the intermediate term. So somewhere in here, if you feel confident that you've done very well, it's participating the way you wanted it to, it's acting the way you wanted it to, I would then say, look, if you go from 45 to 46, maybe it's another 50 cents or so. That's very nice, but it's not the end of the world. But I would still say to you, let it take you out with a trading stop. Make it 45, the low today is 45.36. Make it 45.34 and use that, make it a 20 cent trading stop. And if it moves higher today and tomorrow, you've got your trading stop and you're going to get taken out at some point, but higher up. Or you're going to use that stop just below. And why do I want to make it tight? Because if you're going to take some money off, you want to take it closer to what could be an important high, and that's the high. Now, the 9-period moving average is at 45.60. So if you want to see it come back and turn that into support, my eye says it's going to bounce a little bit, and then it's going to come back under the 9-period moving average. And if that happens, then I definitely would want to have something off. So I'm saying be proactive, put it in rather up in this area, but only a tiny portion to reward yourself, because so far the weekly hasn't said a single thing, but of course it's the daily. It's the 120-minute chart that will lead the daily, and the daily will lead the weekly. So yes, just to reward yourself. Would I go short? I don't see anything here to short at this particular time. Maybe in a day or two, but not here. Great. So now let's just do this Netflix. A real quick question. And will Netflix fill the 440s with the 430s? And my answer is I would have a target. If it takes out 439.28, the low of yesterday, then this whole area would be a target. 433.33 is the next level of support, and that should happen within the next few days. On the short term, it's looking very weak. Intermediate term is still looking pretty good. So, folks, stay tuned. Larry Pesavento is coming up. My work's very simple. We are short the Dow right now. Got a pretty tight stop. We're going to be watching it real closely, because if the Dow goes underneath 16,800 the next 2 days, that's poor action. Watch
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.